presentation of TFNN. It is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. I'm Steve Rhodes, and welcome to the Trader's Edge, folks. I hope you had an extraordinary weekend. I know I did. And now we're off to Marvelous Monday. What a great way to start the week. If you were down here joining us here in Clearwater, you'd see all kinds of sunny skies and warm temperatures. It has warmed up again. You know, we're coming into May here. Today is the last day of April. I don't have to tell you that. And so the question is going to be, is it sell in May, go away, and come back in October? Or are we in store for maybe something a little bit different? We're going to find out. I don't know if we'll find out today, but we're certainly going to find out soon enough as we take a quick tour around the globe. We'll start here in the U.S. You've got the futures off just slightly right now. You've got the Dow futures off about 16 or so. The ES Mini, that's the S&P futures, they're off about 3. You've got the NASDAQ futures down about 8. The Russell 2000 off just slightly under 2 points at the moment. King dollar trying to make a charge this morning. It's up 16 ticks. We're going to look at that. Gold is trading out at $16.52. That's down $12 right now. Silver's off 60 cents this morning, out at $30.75. Light sweet crude off $1, trading out at $104 even. That's not $1.04, but $104 even. Quickly around the globe. Let's continue. Let's start off in Asia. Over in Asia last night, a little bit of a mixed bag. You had the Hang Seng up 352 points. Now, that index closed out at 21,094. You had the Shanghai off 8 points, the Nikkei down 40 points. We know the Nikkei is just simply doing what it should do, which is backing off a bit. We're watching that closely because we want to be over some of the stocks in Japan, as well as the yen. We'll take a look at the yen today and any currency. Over in Europe right now, you've got the DAX off just slightly, down 5 points. The FTSE off 2680. Our call number is 877-927-6648. And, you know, folks, there are many ways to go forward, but only one way to stand still. So don't stand still. You know, whatever it is that you're doing in your life, make sure that you're taking action. And the other thing is, life isn't about finding yourself, folks. Life is about creating yourself. You know, what you want to be is not a prisoner of your past. You want to be a pioneer of your future. So part of being a pioneer of your future is take a look at these markets. It really doesn't matter what chart it is I've got on my screen. And for everybody listening to us on the radio, thank you so much for that. We really do appreciate it. This show here is archived on Channel 9, so maybe I'm going to say something or I'm going to teach you something, and you can always go back. You can replay the archive. You can take a look at my charts that I've got up on the screen here, because what we're always looking for are patterns. Sometimes we just simply have to wait for the pattern to present itself, and to a certain extent, that's really what it is that we've got going on right now in the ES Mini. And it wouldn't matter, again, what chart it is we're looking at, because the chart patterns are going to be all the same. We take a look at our measurement tools that we use, which are ABCD formation tools, or we use retracement and expansion tools. This is our Fibonacci sequence of numbers that we use. A retracement is a 38.2, a 0.382, but it's 38%. We use 0.618. That's when you come visit us here in Clearwater. You're going to visit us at Suite 618. How did that happen? And then what you've got is 0.786. Those are your three retracements that I want you to really pay attention to. And then you've got your expansions, 1.272 and 1.618. And the rulers that we use to measure those, folks, they don't care what chart it is that we're looking at. It wouldn't matter whether it's a commodity, whether it's corn, whether it's wheat, whether it's oil, whether it's a futures market, whether it's the diamonds, which is the ETF for the Dow, whether it's the SPYs. It really doesn't matter. So the tools that I teach you here, and in the morning, we start off just simply with the futures because they help to paint a little bit of a way as to where the market is going, where it's up against maybe some support or resistance. And so you want to be able to learn these tools, you know, and it's a great way to learn. Monday's a great way to learn how to use those tools here at TFNN. Why? Because after this show, you've got the Money Master, so you got Tom and I, you know, a bull and a bear. You've got then we go all the way up to Newton, Massachusetts. We go up to Basil Chapman. Then we go all the way to the West Coast. We wake up Larry Pesavento. He's coming to us live from Tucson. Then all the way back here from 3 to 4 for David White. Everybody using tools just a little bit differently. If we take a look at today, you know, do you believe in what you believe in powers outside of yourself, maybe like planetary powers? Well, if you take a look at last Monday in the marketplace, in fact, let me just go over to the index futures here real quickly. We'll go over to the ES Mini. And we're going to go back and take a look at Monday. So we came to you live last Monday. let me just go ahead and get rid of these retracement areas here. We'll put them back up in a moment. But just to make it a little bit easier to take a look at, when we take a look at last Monday, that was this day right here as the ES Mini made a low there of 1354. Now, last Monday when we came in here, we had a 3 planetary index date, P index date. And that's some work that Larry Pesavento did, Dr. Ruth Miller, I believe, maybe Bryce Gilmore. A couple folks were involved with taking a look at that. And, folks, what it is we use an ephemeris. You can use an ephemeris. There's an ephemeris if you want to get it. It's called the New American Ephemeris. It's produced by StarCraft Publishing. You can find that just simply by Googling on the Internet. You can always send me an email, steve@tfn.com. I'll be happy to point you in the right direction. But at the bottom of that ephemeris is a daily aspectarian. It shows you the planetary alignments that are going on. And what we've done is we've made it pretty easy. All you have to do is just simply, count them up. And you'll see when you have an anomaly. Well, last week we had when you have only 3 planets lining up, that is what we'll call maybe an anomaly. It's where, it's unusual for you to have 3 planets lined up. Now, the original work that Larry had done was in the past. In fact, tomorrow I'm going to, I'll have on my screen, because I've done a study which covered 300 years, going from 1800 to 2100. I figured that was a good enough sample size. That's 109,000 days out there. And that sample size took a look at each day, how many planets were lined up on each day. And I'll show you that distribution table tomorrow. I'll make sure that I've got that so you can take a look at it. Well, last Monday happened to be a planetary index date. Over the weekend, we had a couple of lunar cycles that came in. We had a new moon that came in, and we had, I believe we had perigee or apogee. I can't recall which one. One is where the moon is furthest away, the other one is close. Doesn't really matter. But the whole idea is we had a lunar cycle on Saturday, a lunar cycle on Sunday. We had a 3 P index date on Monday. And the thing is, when you have these P index dates, you don't know whether they're going to make a high or a low. Now, if you believe in forces outside of just simply your environment and you believe in those external forces, well, how is it that on Monday that happened to be where you had a market low? Because that's what we had out there. Now, the original work that was done by Larry and the group did not contain, some other planets. So if we took a look at the ephemeris going back further, it didn't include planets. I'll call them planets/asteroids. Because what folks would, and the markets are kind of flat here right now, so that's why I'm actually going into this dialogue. And it's important. I'm going to bring you around to why I'm even bringing it up. And that's this. So they're in the New American Ephemeris, if you were to get today's edition, you're going to see planets/asteroids like Chiron, Ceres, Vesta. I believe that there's one other one that's in there as well. But in the original work that Larry and Dr. Ruth did, those planets/asteroids weren't part of the daily aspectarian. They weren't part of the ephemeris. So you have to be careful when you're trying to compare apples to apples. Well, that's a nice thing about being able to have a digital format of this, because I'm able to do that in almost the click of a button, pretty close to a click of a button. And today happens to be another 3 planetary index date. That is going back to the original work that occurred when Larry did that years and years ago. Now, last week on Monday, you had a 3 P index date come in, but that happened to be both a 3 P index date on the old style, or the original work that was done, as well as the new work. So that gave us an indication that it was going to be pretty powerful. Plus, you had it lined up with a couple of lunar fuses. You don't know whether it's going to be a high or low till it plays out, and we certainly got that confirmation. The following day, on Tuesday, you had the market move up. You certainly had the market moving up after Apple's release of earnings. But, this whole planetary, folks, all this stuff was out there thousands of years before Apple, way before, so it was showing that there was going to be perhaps some type of turn. At this stage here, it was a turn to move to the upside. Now, why do I even bring that up? Well, today, if we were back in time, if we were going back to the future, so to speak, we would be taking a look at the original work that was done, and today would also be a planetary index date, a 3 planetary index date. So we'll see how today plays out. But most important, folks, what I want you to mark on your calendar is this. I want you to mark down the day of May 18th. May 18th, folks, and we'll take a look at it, tomorrow a little bit more in detail. But on May 18th, there are only 2 planets that are going to be in alignment on your daily aspectarian. You want to know how much of an anomaly that is? I believe it's something like around 60 or so of these occur over 300 years. That's over 109,000 days. Folks, there's going to be some fireworks somewhere, and we're going to be here to see it. Why? Because that happens to be on a Friday. So you want to mark on your calendar May the 18th, folks, because there is you want to pay attention to these. You absolutely do. So let's continue just simply going to take, as long as we've got the daily ES Mini up here, let's go ahead and put the tool that I use. It's in the software that I've got here that automatically helps me to measure between swing points. And swing points, folks, are just simply where you've got major shifts or turns in the marketplace. And it works on any time frame, any chart. This happens to be a daily chart that we've got up here. And what you can see on Friday, the ES Mini got up to a high here. And the high is the top of the candle, which we call either a wick or a I can't even remember the other term. But you did have the ES Mini get up to a high of 1403. At 1403, folks, it was a 0.786 retracement off of the highs from March the 27th. You have to expect when you get up to these elevators, when you get to 618, when you get to 786, that there's going to be some people that are going to get off the elevator. That's what you've got going on right now, with the ES Mini being down about 2 3/4 points, straight down to 1396 even. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's take a quick tour around the markets here with regard to earnings releases before the bell. Let's see what's popping and what's dropping out here. And so we got popping to the upside. We've got TG. Let me just pull this over here on my screen. That way I can look straight into the camera, or at least just below the camera lens here. So, well, that didn't work real well. Let me see this. There we go. Okay. So we're taking a look at what's popping here right now. So popping in the pre-market, you've got TGE is the ticker symbol, TGC Industries Inc. They closed out at 10:01. They're up 15% this morning. Last trade here, let's see, the last trade looks like it fired off at 17.44. So that's up nicely if you consider that it closed out. That's more than 14%. What is going on there? So let's see here. Okay, 11.49. I knew that there was something that was off. So I can at least do my math to that extent. I know I know the difference between 10 and 7. And so TGC, let's start over here. They closed out at 10:01. Their last trade fired off at 11.49. Looks like the market is liking their earnings. They had income from operations of $20 million versus $9 million, so that's not so shabby. And the revenue is $67 million versus $50 million. So they're having some nice growth. We'll go ahead and take a look at that stock chart, see where that is trading at as far as some swing points. You've got Harman International, HAR, they're the ticker symbol. They're up almost 10% this morning. They closed out at 47.26. They're closing out at 51.80. Their Q3 net sales, $1.1 versus 0.95. Earnings per share up at 74 cents versus 60 cents. So nice work there. That's why they are up 9.6% in the pre-market. You've got Chengyou. That sounds like a Chinese entity to me. CYOU. So CYOU reporting revenue of $139.5 million versus $143, but the street is digging that for some reason. And you've got their net earnings, $1.22, restated though, versus $1.10 from the prior year that they restated. So I don't know if they restated it up or down. Doesn't matter. The market says 25.01 is a number. That's what it's trading at in the pre-market. They closed out at 24.15 on Friday. Lastly, that we'll take a look at here, up over 1%, almost 2%. Watson Pharmaceuticals, WPI. They had revenues, let's see here, revenues of $4.5 billion. Holy cow. $4.5 billion versus $876 million. They must have bought somebody in that time frame, because that's a healthy jump. How about that? That is Watson Pharmaceuticals. Let's take a look at that one. WSO is the ticker symbol. That is what's moving to the upside. Let's go take a look at what is grooving to the downside here. It'll just be easier for me to do it like this. There we go. So you've got Sohu Inc., S-O-H-U. That is the ticker symbol. They are down about almost 9% in the pre-market. They closed out at $55 and change. They're trading out at $50.87 right now. Their decline, let's see, their profit decline on lower margin. Let's see if it gives me any other information out here. Okay, so their earnings, just between net income, Q2 revenue, $139 million versus $143. They are trading now. You've got Humana, H-U-M is a ticker symbol. They are also trading off about 6% this morning. They closed out Friday's session at 87.82. They're trading down to 82.70. So let's see here. What are they showing here as far as earnings releases? Let's see here. Okay, let's see here. We've got Humana, $2.15 versus $2.25. Let's see here. Net income, $248 million versus $315. That is Humana on the downside. That's really what is kind of leading the markets to the upside and to the downside. Let's go to our first caller. Let's go to Victor in New Jersey. Victor, thanks for calling. Thanks for holding.
Yeah, for Credit Suisse, it's going to gap down today. It's going to open at 23.35. Is it going to go all the way to the bottom?
All right, let's take a look at that. So we're taking a look at Credit Suisse here, folks, and their 52-week high is 45.77, low of 21.18, and in the pre-market here, they are trading out at 23.41. What did you think they were? That was the last trade that fired off. What did you think?
Yeah, I'm saying, does it go all the way to the bottom? Like, does it feel? See how it's closed all the gaps? That's going to happen with the SPY, because SPY closed at 126.50 December 31st, and then it gapped up to 127.50. So is SPY, of all the other stocks on the market index, is going to start filling their gaps or not necessarily?
Well, so you got to kind of take things one at a time. When you take a look at, and I've got CS, Credit Suisse, up on my chart here, and what you see are gaps all over the place. If we take a look at the ABC down that is out there, the A point would be March 19th out at 29.97. I'd say the B point would be down on April the 10th. Up to the high on April 17th. Looks to me like 22.70 is where it is headed, trading out at 23.41 right now. But if you want to stay on the line, we can go ahead.
Can you do SPY for me?
Yeah, when we come back from break, we'll take a look at it. We'll be right back with Victor. Okay, New Jersey.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 4 points right now. You've got the S&Ps off 3, composite off 8, small caps down 1. Apple struggling straight out of the gate. They're down $7 right now, trading out at $5.95. Let's see what is popping to the upside. You've got G-Pro, GenProbe Inc. They're up $13 and change. Last traded out, that's up 19%, traded out at $81.87. Barnes & Noble, BKS, after their deal with Microsoft that was announced, they are up 82% this morning. Well, we'll go take a look at Barnes & Noble. They've got some life in them. They certainly got some life when you take a look at being up 82%. You've got Sunoco. They are up 20%, trading out at $49.23. That's up $8 and change. To the downside, Apple leading the charge. To the downside, Sohu, which we covered in the pre-market, they are next in line, and Humana, HUM, they are right after them. Let's go to Kevin in Sterling, Massachusetts. Kevin, thanks for calling. Thanks for holding. Kevin, are you there?
Yeah.
How are you this morning? We can't hear Kevin that well. Don't know. They're checking in the audio room. What Kevin wanted to take a look at is ticker symbol ERY, Enerplus Corp. And let's see, Enerplus Corp, together their subsidiaries engage in the exploration and development of crude oil and natural gas in the United States and Canada. They've got a 52-week high of $32.86, 52-week low of $17.45. Looks like they're trading out at $18.22 right now. Is that right? ERF. Let me see here. Let me make sure. Yeah, ERF. They're trading out at $18.22. Is Kevin there? No. Okay, Kevin dropped. So I'm not sure what Kevin was wanting to do here, but let's go ahead and pull this stock back. Let's take a look at it since Kevin was good enough to call in, and hopefully we'll cover what Kevin was looking for. You can see this stock here is trading now. Let's just take a look at ABC patterns that are out there. So the simplest ABCD, and we're looking at the weekly chart here. I would go ahead and take my A point, make it this swing point up here at July 29th, when it traded up to a high of 32.15, down to a low that was put in on October 7th. It got down the week of October 7th. So October 4th, as we know, was a low in our markets. It would make sense. Now, as you know, our markets are well above the October 4th area. This happens to be a stock that is well below that. So that immediately is telling you, that you've got weakness. It's why you want to make sure there's certain dates that you've got written down or that you're certainly aware of as far as to where things are trading, because this certainly is showing some substantial weakness. Must be, this chart here looks more like the UNG chart, more like the natural gas chart, that it certainly does with regard to the S&P 500. So you can see it's trading underneath its 1-to-1 A to B equals C to D. You had some real substantial volume on last week. Let me just refresh my screen here. Oops, give me a second here. Let me just refresh it. Just make sure that what we're looking at is the accurate data here. And so it does look like last week. There we go. That's a little bit better. Okay. So last week, you had some real volume coming out as you were coming into the D point. That's really what you want to pay attention to out here, Kevin, or anyone else that's trading AB equals CD patterns, because as you're making the D point, it's releasing a ton of information to you. In fact, it looks like for the week we had a gap down. Let's see. The low from the prior week was 2037. The high from that week was 2023. 25. So when you're making the D point, and the D point here was being made really the week of April the 13th, not only do you have volume coming out of it, but you've got a gap. So you've got a gap coming down into it with volume. What it tells me is it wants to go to lower price. Well, just on your ABC, that was the easy ABCD that was out there. You could take a look at the longer term AB equals CD. We'd start with the swing point high at January 14th and come all the way back down to that October 7th area. Now what you can see is that today, or really last week, you almost got down to that area. You got down to it close enough for me. 1733 is the price point. It got down to 1745. But what you'll also see is you go back to that larger A to B equals CD. See how price is now traveling well on the inside of, so there's a stronger move on the way down. There was a stronger move as you were coming into the D point. So if we take a look at where this really wants to trade to, it wants to trade into right now here. The other thing you'd look at is you look at the downdraft going back to 2008, much, just very similar to the market. But you're certainly trading underneath that area, and the low on that was 2050. So this looks to me like it wants to get down and test the March 09 lows. The high on that is 1554. The low there is 1285. That is on ERF, Enter Plus Corp. Hopefully that answered Kevin's question. Let's go back to Victor. He was at work, and he had to hang up, so I'm thinking Victor might have in one ear a earbud listening to us on maybe his iPhone or maybe his Android device. And so let's go take a look at the SPYs. He wanted to take a look at the SPYs. Let me find that ETF out here. Wasn't sure what time frame it was, though, that Victor was looking at from a trade standpoint. So let's just take a look at the SPYs, see what it is that we've got out here. What you can see, I'm going back here on the SPYs, and what I'm pulling up here is the longer term. When I say longer term, going back to that October time frame, that October 4th area, just like we covered when we were looking at ERF. And if you take a look at the uptrend channel that the SPYs have been in, we certainly did have a break to the downside with volume on April the 10th. We had and what happened is, the SPYs came back up. They tested that area. They broke inside that channel on April the 12th. A little indecisive right around the downtrend line, or the bottom of that uptrend line of that channel. What did you do on Friday? On Friday, well, Thursday, you came into it. You closed over it. On Friday, you tested the bottom of it. You closed over it. Right now, you're really trading right on top of it, right in the 140. 05, 06 range. Certainly, if you take a look at, I know that Victor was taking a look or asking about gaps that are out there. Well, when we take a look at the gaps, really have been filled on the SPYs. The SPYs gapped down from April the 3rd to the April 4th time frame. And when it gapped down, on April the 3rd, you did 155 million. When you gapped down, you didn't really do it with conviction. You gapped down with 146 million shares. But you want to always pay attention to gaps. The following, because what that led to was a larger downdraft into the April 10th time frame. So the SPYs right now, if you're taking a look at what I also have up on my screen, you just simply take a look at a simple moving average. Now, when I say simple, I'm using the exponential moving average, so I shouldn't have used the word simple. But what you're looking at is a 9-day, 18-day exponential moving average. What you can see is on Friday last week, the blue line, which is the 9-day, crossed over the 18. And, folks, there's a lot of different tools that you can use to map out any of the equities that you trade, anything that you trade, how about that? Sounds like Tweety Bird, that you trade. In this case here, one of the tools that you certainly can take a look at is the 9-day versus 18-day. You might want to be able to wait for conviction, wait for, some confirmation that you've got momentum moving in your direction. Certainly, if you just take a look at the 9-day, 18-day on the SPYs here, you could have waited if you just simply use this and take a look at it on December 21st when you came into the marketplace as the 9-day was crossing through it, and look how well that held. You could have stayed in your long position until you crossed over it. Of course, that crossover came right here on April the 10th as the market was moving down. Of course, if you had come into it right here on December 21st when you were at a price point of about 124 and you ended up getting out of it at around 135, even if you waited to the close, you would have done pretty well for yourself. So that 9-day is over the 18 as well. You are trading underneath the uptrend channel that you've got inside the SPYs. Now, the SPYs, folks, if we go take a look at the S&P 500, which we'll do, I'll show you a little bit of a divergence there, and then I'll come back and explain it. So we're taking a look at the SPY here. Watch as I switch over to the actual S&P 500. Okay, I didn't mean to get to the ES Mini. I meant to get to the actual index. Here we go. So now let's take the S&P 500, and let's look at the uptrend channel that you'll see there. Notice the difference here in the uptrend channel. You know, on the SPYs, we were trading down towards the bottom, right? So on the SPYs, we're trading down towards the bottom. Yet when we take a look at the S&P 500, we're above the midpoint. You can see that, right? You can clearly see that. Now I'm going to switch back over to the SPY here. And if we switch back over to the SPY, again, so there's the SPY. You're taking a look at it. I'll zoom back out. Well, what's the difference? Well, the difference is that in the SPY, they are automatically adjusting for any types of distributions, any dividends and so forth, and they're not doing that inside the S&P 500. So where you're taking a look at channels and trends that are out there, what you really want to do in this case here is you want to switch over to the ETF. You want to switch over to the SPY because here you've got price-adjusted price. I hope that makes sense, price-adjusted price. And when you do that, this is giving you, in my opinion, this is giving you a better reflection of what's really going on inside the market. If you only traded, and if you didn't know that, and you were only trading off of what you saw inside this index here, you would think it's absolutely clear sailing. So I think when it comes to the market, yes, the S&P is important, but I think it is probably right now while you're trading down towards the lower part of the uptrend channel, I think it's more important for you to take a look at the SPYs that are out there. So hopefully that helps you, and maybe that was something that you actually didn't know, and that's the reason that you tune into TFNN each and every day. So right now you've got the Dow off about 36 points, the S&P's off about 7. And let's go take a look at, I did have a request to take a look at Maxwell Technologies. MXWL is the ticker symbol there. So let's go take a look at that. That apparently took quite a pounding on Friday. Oh, it did. You had a gap down with some substantial volume. So let's go take a look at what we have out there on Maxwell Technologies. Now I'm going to go ahead and pull this thing back here 2 week. And the question that came over was, is this a good time to buy? So you can see the volume that came out of it was about 8 million shares. On the daily chart, you can see that sticks out, major league sticks out. So let's go take a look at some longer-term time frames on here. Let's go take a look at the weekly and then the monthly because we are almost done with the month. Well, that doesn't look very good, does it? So this looks like a freight train here that maybe you don't want to get in front of. It is underneath the swing point, and this is on the weekly chart going back to July 2010. The low was 1016. You're trading out right now at 981. And obviously, you know, we're not going to see anything like this from a volume standpoint. So if we take a look at where this could be trading back to, once you're underneath a swing point, what you can do is you can trade down to the next swing point. Well, that next swing point is going to take you all the way down to the lows going back to 2008 in the $5 range, $4 to $5 range. Let's go take a look at the monthly, see what we have out here on a monthly chart. And on the monthly chart, again, that's also showing that you are below the swing point that was at $10.16. That's going back to July 31st, 2010. Of course, you could get back inside that today. You know, today is the end of the month, and you close below that. And again, you know, with just the volume that's coming here to the individual that asked me about that, I don't see jumping inside in front of this freight train right here. That is on Maxwell Technologies. Let's continue taking a look at what is popping and what is dropping out here. So if we go back to the charts, we've got GPRO, GenProbe Inc. GPRO is the ticker symbol. Let's pull that up here on the charts here, see what they are doing or what they are going into. So nice gap up. You can see they closed out at the $69 area, trading out at $81.77. They've got some huge volume. So what do they do? What did they do today? I'm going to put this on the weekly, and then we'll look to the news here real quick, see what they've got. Buyout of GenProbe. Okay, well, there you go. So they've got a buyout that's going on. So I don't necessarily need to pay too much attention to it. What it is doing, it's trading up towards the highs going back to May 20th. The low there at 78.84, the high of 86.96. So I'm going to skip on to the next one. It won't be, well, let's just pull up the Barnes & Noble chart just for the heck of it. BKS is the ticker symbol there, and BKS. So you got Barnes & Noble trading out at $23.77 right now. Now, I didn't get a chance to actually see what was the deal that they did with Microsoft out here. So they've got a partnership with Microsoft. So Microsoft is going to invest $300 million in Barnes & Noble. Okay, so that is helpful. So you got just an investment, not a buyout. So let's go see where they're actually trading at. I do have up here the daily chart. I'm going to go ahead and put the weekly chart. We'll start with the weekly chart. And, okay, and then we're going to just take a look at that. We'll go to Lou in New Hampshire in just a minute. So we're taking a look at Barnes & Noble. Now, you've got some good volume today. You've already done 8.3 million shares. It is not trading back to its highs. You can see Barnes & Noble well off of its highs. Its highs going back to March in 2006 when it traded out at 48.41. And this is all about, obviously, the digital e-books. And I guess Microsoft has no problems with the brick-and-mortar stores that Barnes & Noble has out there. Let's go to Lou in New Hampshire. Lou, thanks for calling. Thanks for holding.
Yeah, good morning.
How are you today?
Not bad. I was thinking of shorting TZA.
Shorting TZA or shorting the IWM using TZA?
No, shorting TZA, going long.
Sure. Okay. So what you can do, just as a better idea, you would you consider buying TNA, which is the long of the IWM?
Sure.
Okay. So when we get back from the break here, we're going to go take a look at the IWM with Lou, and we're going to take a look, because, we'll take a look at the two. I don't know what the two are trading at, but I think you would be better off going long TNA, especially if you're looking are you going to be looking at this as just a day trade, or what's your time frame?
Probably a couple weeks.
Couple weeks, okay. We'll be right back with Lou in New Hampshire taking a look at TNA. That's the direction 3 times shares for the IWM, folks. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back to Marvelous Monday, folks, and stay tuned. Yes, Tom and I follow up next with the Money Master Show. Then we go up to Newton, Mass, to our man Basil Chapman, and all the way out to Tucson, Arizona, to Larry Pesavento, back here from 3 to 4 with David White. We're on the line with Lou, who is from New Hampshire, who is taking a look at wanting to go long the IWM. So first thing, Lou, is what you'd want to do is, before you'd enter TNA or TZA, you want to really pay attention to what's going on inside the IWM, because that's what you would trade it off of.
Exactly.
Okay. So in the IWM, what you're looking for is an entry point. So let's assume that your position is correct, that going long the IWM makes sense. So you're looking for an entry point and you're looking for some type of signal. So that would be some type of pattern to complete. Right now you've got the IWM. I've got the 10-minute chart up on my screen. You're trading out. Last tick is 81.70. And if we just simply go back to the most recent swing point, which was put in on Friday morning at 10:10. The low there was 81.03. You can see that, you're coming down here with some decent volume. Again, I also put up that 9-day, 18-day exponential moving average. What you'd want to do is you'd want to see some pattern complete, or you'd want to see a turn up in that, and then at that point in time, you might be able to take pull the trigger. Now, in this case here, there's no AB equals CD pattern that has developed. All you've got now is potentially just simply the A to B leg. And that's where you're starting off with a high that came in at 230 on April the 27th. And the high there was 82.46. So since then, you've just kind of traded down. You're coming into that 0.618 area. The next place here where I would think there would be a release of information to you is going to be as it comes into the swing point. The swing point here that I'm looking at on a 10-minute chart, and we'll do a 10-minute, then maybe a 30-minute. The 10-minute chart is at the 10:10 time frame, 81.46. To 81.03 is the price point, $2.2 million. What you'd like to see is you'd like to see a rejection of that swing point. But that's the next place where you're going to get some type of release of information. That's on the 10-minute. If we just go to a little bit longer-term chart, let's go to the 30-minute chart here, and let me refresh my screen here, make sure that we've got the proper refresh. And again, what you will see here is on the 30-minute chart, the swing point happens to be at 10:30. Makes sense. 4.9 million shares. Now, what you've done so far in the first 27 minutes of trading is 5.9 million shares. So see how you're coming down into that area with more volume?
Uh-huh.
Yeah. So you don't want to pull the trigger on this until that swing point at least gets tested. What you'd be looking for now, and it looks like it probably is not going to test that here in the next 2.5 minutes, but you're looking for that next 30 minutes, you're looking for it to test that area, reject it on less than 4.9 million shares. So I would pay attention to the 10-minute chart and then the 30-minute chart. And then once you've got the test, if you get a rejection of that area, then you can go ahead and pull your trigger on the TNA.
Got it.
Okay, but make sure you used a position size tool, even if it's just a mental thing in your head. On the TNA, what you want to understand as you're entering that trade is you're going to want to understand what the average true range is. And on TNA, I can tell you exactly what it is, just simply coming over and using my position size tool. The actual average true range is $2.71. So wherever it is that you would go and take a long position, make sure that your stop is at least $2.71 below the low. I would recommend that it be more than that. All righty?
I got it.
Okay. Lou, thanks for calling, and have a great day. Folks,
you.
Yep, you bet. As we go into the close of the show, you've got the Dow down 35. Apple really struggling. They're down 13 points right now. So it looks like Apple is going to have an impact on the markets on the way down, just as it did on the way up, folks. Stay tuned. Tom and I will be up next. Have a great Monday, and I look forward to seeing you again tomorrow morning, 9 o'clock.